Hello, monsters. I'm back. Let's take a look at Google. We did a video on this a couple of weeks ago, which worked out very well. So here is another one. This is what I'm seeing. Here's the daily chart. And what I want to show is that basically how it's consolidating in this extremely tight range. Call it, this is GOOG, by the way. We're not doing GOOGL. This is just a regular Google. Anyways, it's consolidating into this extremely tight range, and what I want to show is if you go to the 30-minute chart, just to kind of take a very quick look at a very short-term scale. So here is Friday. It came up to 745, 745 or 746 and stalled. Here is yesterday, Thursday, 745, back down. Here is Wednesday. Into the close, went all the way up to 745 but could not break out. Go back further. Here is Monday. After initial downdrift, it came up to 745 again, tried to break out, could not move higher. So Monday 745, then Wednesday again, then Thursday again, and today again. So this 745 level or has become pretty interesting resistance here, and you can see this is the reason why this on this 30-minute chart this giant volume over price resistance is starting to build. So the key here is to wait for a technical breakout through 745, or if you want to be a little more on the safe side, call it 746 before you want to jump into the call options. If you go back to the daily chart, so the net result of the 745 is right here. So you can call it 745 to 746 right here. So you want to wait until the breakout through this level before you get excited about this. This is a bull flag consolidation. To show you another way, if I go here, let's see. Here's a chart. So here's a chart. And you can see this is that consolidation that's taking place, forming a tight wedge formation, lower highs but also higher lows, and here is your Bollinger Bands coming down. Now you can go back and basically expand this view on for example, a 10-month scale. It doesn't really matter. The Bollinger Bands are extremely tight. You see it's coming down from both the top and it's going up from the bottom. It's starting to get very tight. They are even tighter than when we saw the last time back in late December, which resulted in a big sell-off at that particular time. They're tighter than here. They're tighter than here. They're not as tight as you have to go all the way back to basically June to see Bollinger Bands basically that were tighter than this. But they're forming this extremely tight wedge, and these Bollinger Bands are coming down. My guess is that if you give it another 2 to 3 days, these Bollinger Bands are going to be really tight. I mean, I can go on further. If at the bottom of this chart I can show you this. Let's do this. Let's put Bollinger Bands right here actually. Let's do Bollinger Band width, and this will show you if I go right here. So how tight these Bollinger. So these are the Bollinger Bands, and here is the Bollinger Bands, how wide they have been in the past. So here they are. They are the tightest that you can see. How tight they are? They're only 3.4% wide, which is really tight. So basically, this is another setup of the same cause. I'm going to go back to 4-month chart just to kind of give you a quick look again. So here's the case again. Again, what you want to do is you want to wait until the breakout through 745 before you get excited, and at that point you want to buy straight calls, and you'll be looking for a move all the way back to 760, 770 level. Now, what am I seeing in the chart? Here's the option market. Scroll down all the way to May, and here you will see. Now, the earnings are going to be coming out the week after April expiration. So, but somehow, for these bulls are targeting May. So they're buying themselves a little bit more time, and they're targeting May 750 strike calls. They bought 2,000 contracts of these this morning, and the high point that they paid for this was as much as $23 a contract. These are not small size bets. These are pretty significant bets. I mean, the pricey contracts, so you can do the math. Somebody buying 2,000 contracts and paying up to $23 a contract. These are May 750 strike calls. Earnings are going to be out here sometime. This is April expiration, which is next week, so earnings are going to be out the week after April expiration. So how do I want to play this? I'm going to keep it pretty simple. What I want to do is I want to wait until the 7:45 breakout, which may happen later today, may happen on Monday and Tuesday, and I want to do nothing and just go straight to weekly calls and just trade weekly calls and nothing else. You're looking for an intraday move, you want to make quick bucks, and you want to get out. How would I play this? So let's say if the breakout happens early next week, and I know these are going to be very, very short term, so this is, you're going to have to probably act like a day trader on this one. Just go straight to 7:45 at the money strike calls at that point that are currently going for $5. I understand you'll be paying a little bit more for these calls next time if you wait for the breakout before jumping in, but I think that's what you have to do. You have to wait for clear technical breakout before you jump in. So I would buy either 7:45 or 7:47.5 or 7:50 strike calls the minute you have the alert go off at 7:45 breakout. All right, so that's your key here. Now, quick view on the fundamental side. You know that there is a story going around that both Verizon and Google are expressing interest in buying the search engine of Yahoo. We had that news come out recently. We saw Verizon sell off on that particular news while Yahoo was trying to break out, although they basically ended up being a slightly, they faded that move. So Yahoo is not doing much either. But we know that major catalyst is out there. I don't know exactly who's buying what, to be honest with you. I have no idea the timing of it. All we know is that Marissa Mayer of Yahoo wants to sell the core search business, and I don't know who the final bidder is going to be that's going to emerge. Frankly, I don't understand why Google would be interested in that at all. Google is does so well with its own searches, they don't need it. But here is, aside from that whole Yahoo bidders and whatnot, but this is the research note that I want to show on the fundamental side that gets my attention. And I think this might be the reason why these bulls are excited in May 7:50 strike calls. This is from yesterday, 2 days ago, April 6th, and came from Bank of America when they were doing March same-store sales update. Now, it goes on to talk about what is Amazon saying. Amazon was up 14.9% year over year. And eBay was down 0.2%. We discussed this one in chat room. Here's Google, and this is what gets my attention. Now, pay close focus to the actual what's happening in Google Shopping. First, this goes on to suggest that the actual AdWords, Google AdWords, the same store growth for AdWords was down 10.2% year over year, and it was down 13.2% in the prior month. For the quarter, it is averaging down 10.3%. In context, last quarter, the Q4 of 2015, was also down 10.33%. And before that, the third quarter of last year was down 10.4% last year. So this is obviously not a good trend. However, this is the key, because not everybody will pick up on this. The same store sales growth for Google, which is for AdWords, is not picking up a very critical piece of growth, which is Google Shopping. And it goes on to write here, search activity remains volatile as clicks are shifting to Google Shopping and Google product listing ads, which are not included in the search data. Google Shopping growth remains very strong as Google continues to optimize PLA placement. How strong? Google Shopping growth was 42% year over year, according to this update they got on April 6th, versus 35% in February. That's an acceleration from February to March. For the quarter, average monthly Google Shopping growth was 37%. This is Q1 we are talking about, versus 33% in the prior quarter. Also accelerated sharply from 33% in the prior quarter to 37% in this quarter. So month over month as well as quarter over quarter, sequentially, the growth in Google Shopping accelerated, but the most headlines that you're going to see are going to be talking about the AdWords, because this is the most common metrics that every look at, but does not pick up the Google Shopping. So I think you're simply seeing shift of dollars going from the AdWords to the Google Shopping, and I think so the net the positive, it's a positive impact going forward, and it basically says it all just by looking at this headline. Google search down, but traffic shifting to Google Shopping, and that's all you really need to know. The point is this: what I'm expecting when the company reports earnings the next time, I think you're going to see Google surprise to upside again and break out. And some of these bulls in the option market are already placing a bet ahead of that after getting this update from Bank of America with 2000 May 750 strike calls. You can come back to this and just make an earnings play at some point. Maybe we'll do some sort of wide butterfly spread, basically look for $20-30 move to the upside, maybe buy like 750, May 750, 775, or 800 call butterfly spread or something like that. But purely from a technical standpoint, on short-term basis, the trade here is that when you see this thing break out, possibly next week through 745 level, I'm just going to simply jump into short-term call options of that particular week and just trade them higher. Probably will go out to 750 strike, which are currently going for less than $3, and just going to trade those higher intraday and probably won't even hold it for more than a day or two and then get out. So that's the play.